bullish since the start of the new year. It was something that we discussed, going into the end of last year. We really thought that we might see lower lows, and that really did not come. And of course, so many assets
that Sam Bankman-Fried didn't like Bitcoin, and he didn't like it. I may have said this last month. He didn't like it because it's decentralized.
Bitcoin decisively pushed past $17,000 on Sunday, breaking out of its recent price range to hit a 3-week high. BTC briefly topped $17,000 as well on Friday after data suggesting that U.S. services businesses were slowing, seen by traders in both crypto and traditional markets as a sign that the Federal Reserve might soon be able to ease up on its push to tighten financial conditions. But it took a couple more days for Bitcoin to cement the move past the threshold that effectively capped any rallies since mid-December. Analysts were quick to point out that price charts are still tilting bearish, though according to FundStrat's Sean Farrell, blockchain data suggests there are plenty of ready buyers with, quote, appetite to buy BTC at the very specific level of 16,000 to 17,200, which, quote, paints an incredible picture of a strong buy wall at current market prices and suggests a strong bottom is forming. Right, is Nick Mancini. He's a director of research at sentiment tracker Trade the Chain. Nick, great to have you on the show. So, would love to hear about some of the Bitcoin sentiment you're seeing. If I'm just taking a look at notes, and you're saying that price action has been both bullish since the new year, despite headwinds from the Fed, DCG, and other problems from Silvergate Bank.
Yes, so it's actually been a bit surprisingly bullish since the start of the new year. It was something that we discussed, going into the end of last year. We really thought that we might see lower lows, and that really did not come. And of course, so many assets such as Litecoin, Solana, Atom, the list goes on, were so suppressed, and shorting was so heavy on the market. And of course, we have CPI and a few good outlooks in terms of the macro situation. So when you kind of compare all of that together, no new lows, lots of shorting going on, assets down 70, 80, 90%, and you have a new year, which represents new fund flows, new allocations, potentially new entrants into the market. You, of course, have this short squeeze that we've been seeing. I'm not ready to call it a full-on rally yet because we have so much in front of us, so much headwind still, but it's very positive to see this much buyer interest, above the 16 and 17K level. The only issue we're seeing right now is that a lot of those buyers seem to be stepping out around the 17.3, 17.2K level. So that's something we'll have to look out for moving forward as we assess CPI on Thursday, tech earnings towards the end of the month, and we also have FOMC towards the end of the month as well. And FOMC has historically been a very bearish event for the broader risk markets, both equities and crypto included.
What are your thoughts on the DCG investigation, as well as the Genesis fallout with the Gemini? That is not stirring Bitcoin at all.
Interestingly enough, you are correct. We just saw the sentiment charts previously, and as you can see, there was a lot more green on there than we've discussed in the final months of 2022. And I think that's because of, the narrative of new fund allocation, CPI is looking positive. But you see those dips. Those dips are actually timed with DCG news announcements, which is very interesting that it hasn't exactly ported over into price action. But clearly any DCG news, whether it be Grayscale or Genesis or a Winklevoss tweet to Barry, that is definitely affecting sentiment and is forcing some buyers to take their money off the table, and it's obviously flatlined a few of the rises that we have seen. Now that we're at 17.3K, we've obviously seen a massive boost. We're very close to early December price action, which is resistance levels for Bitcoin. So I think the 17.3K is going to be a very important number as the market moves into focusing on on CPI, FOMC, and then, of course, the broader impact that Genesis and Grayscale could bring to the market. If DCG goes bankrupt, is Grayscale liquidating their trust? They hold Bitcoin, Ethereum Classic, Bitcoin Cash. The list goes on. So that could be new introduction of supply into the market if that goes wrong. And of course, if Barry and Grayscale and DCG and Genesis somehow figure out a resolution, then that could be extremely positive for the market because A, there's no introduction of supply, and B, there's no headwind of potential introduction of supply and potentially a large market participant leaving the market entirely. So we're very much waiting for that signal, but until that signal comes, the market is very focused on CPI, which seems to be decreasing. And then, of course, the next two headwinds are FOMC and tech earnings, which neither are expected to be very positive for the market.
What can you tell me about Bitcoin trading volumes and tweet volumes? Are people still interested in Bitcoin?
Yeah, so surprisingly enough, we've seen both trading volume and tweet volume rise since the beginning of the year. They're up actually both double-digit percentage points. I want to say 12 to 13% respectively for trading volume and tweet volume. So both of these are good signs. They're not end-all be-all. They're not, buy everything or go long the entire market yet. But we do know that trading volume is how you sustain price action. So if trading volume is steady or increasing day over day, week over week, very positive sign for continuation. And of course, if tweet volume is picking up, and that means there's more retail participants, there's more interest happening, there's more conversation and chatter, which typically translates into at least volatility, potentially continuation of momentum. So again, I think the 17.3K level is where a lot of money is going to come off the table. And we're going to see if 17K brings that money back on the table in anticipation of CPI, which a positive CPI would greatly introduce more trading volume and sentiment, positive sentiment into the market because everyone is worried about inflation and how the Fed is going to react to that inflation.
All right.
Bitcoin. It's been incredibly stable after the FTX related fall off last year. And by many of our metrics, and we will be putting out the Bitcoin Monthly early next week, by many of our metrics, there is outright capitulation all over the place. David Puel, who is our on-chain analytics expert, has a lot of capitulation metrics, and I think every one of them is where it has always bottomed before a turn. Now, we do have the digital currency group drama around Genesis, so we're watching that, and that probably, my guess would be the last shoe to drop if it drops, if they're unable to find their way out of this liquidity crisis. But in the face of that uncertainty, it is very interesting to see the Bitcoin price, for example, more stable in the last quarter than equities and bonds. And I think the other thing to note from bonds, if you adjust bonds for inflation, we have never seen a bigger rout. You have to go back to the 1700s to see a bigger rout than we've just been through. Okay, on to innovation, which is what ARK is all about. And we wanted to share some of the facts and figures having to do with 2022. So not even forward looking. We are looking at last year. And we'll start with crypto then. We did get throughout the year incredible turmoil around Luna, Terra, Celsius, 3AC, FTX, and so forth, and a really big black eye. But if you look at what caused the black eye, it was not Bitcoin or Ethereum. Those blockchains didn't skip a beat, didn't miss one transaction. And what we saw were the centralized entities touching crypto, FTX, 3AC, Celsius, other hedge funds, imploding. Why? They're centralized, not transparent, and there's no liquidity in them. Whereas if you look at what happened on Ethereum, the smart contracts, as trouble was looming, smart contract related margin calls, they were satisfied. Boom, boom, boom. No questions asked, no legal haggles. It just worked. And I think that will be the lesson coming out of this. And it is very interesting to note that Sam Bankman-Fried didn't like Bitcoin. And he didn't like it, I may have said this last month, he didn't like it because it's decentralized, fully transparent, and he couldn't control it. He considered himself the master of the crypto universe, which, of course, the market has disabused him and others of. Fully transparent, and he couldn't control it. He considered himself the master of the crypto universe, which, of course, the market has disabused him and others of.